Welcome back to Retirement Without the Freakout, the show where we cut through the noise and give you straight talk on building a retirement that actually lasts. I'm your host, Joshua Walker, a retirement consultant and the author of the book, How to Retire Without Freaking Out. If you're listening right now in late March 2026, you're probably feeling it. The headlines about Iran, the skyrocketing gas prices, the stock market swings, and the nagging worry in the back of your mind, is this going to mess up my retirement? Today, we're diving deep into exactly this. We're going to talk about the escalating conflict in Iran and how it's already rippling through global markets and what this means for your 401k, your IRA, and your overall retirement accounts. And most importantly, the two key things that will decide whether you win or lose in retirement: stability and income. I've done the research. I've looked at the oil prices, the supply shocks, the inflation numbers, and the broader global shifts happening right now. By the end of this episode, you'll know exactly why these two things matter more than ever and what practical steps you can take today to protect your future. If you haven't grabbed a copy of my book yet, How to Retire Without Freaking Out, you can pick one up on Amazon or at your favorite online bookstore. It's written for people just like you who want real answers and not hype. All right, let's get into it. Let's start with the facts on the ground. As of March 24th, 2026, the U.S. and Israel began targeted strikes on Iranian military and nuclear sites at the end of February. Iran responded with ballistic missiles, attacks on shipping in the Strait of Hormuz, and strikes on oil infrastructure across the Gulf. The Strait of Hormuz is that narrow waterway that carries about 20% of the world's oil, and a huge chunk of liquefied natural gas has been heavily disrupted. Tankers are sitting idle, insurance rates have exploded, and energy flows are getting choked. What does that mean for markets? Well, oil prices have surged if you haven't noticed. Brent crude, the global benchmark, has jumped from around $72 a barrel before the strikes to over $106 and $120 in recent sessions. That's a 40% spike in just a few weeks. And some analysts are warning that if the disruption drags on, we could see sustained prices north of $100 up to $150 a barrel. This isn't just bad news for gas prices. It's a classic supply shock. This kind of shock sends ripples through the entire global economy. All right. Higher energy costs feed directly into inflation. We're already seeing it in the February CPI numbers, and March data will almost certainly show a bigger jump. Utilities, transportation, groceries, everything gets more expensive when oil spikes. And when that inflation heats up, central banks get nervous. The Fed has already signaled they're on hold with rate cuts. That means borrowing costs stay higher for longer, which slows down business investment and puts pressure on stock valuations. Your retirement accounts feel this immediately. Most 401ks and IRAs are heavily tilted towards stocks. So when the market gets nervous about war, oil, and inflation, those accounts drop. We saw the Dow fall hundreds of points in single sessions. S&P futures swing wildly, and even safe haven assets like treasuries get choppy. This is the kind of volatility that can turn a comfortable retirement plan into a stressful one overnight. So if you're in your 50s or 60s and planning to retire in the next 5 or 10 years, this Iran situation is a massive wake-up call. Sequence of return risks, that dreaded phrase where you retire right before or during a market drop, becomes a real threat. A 10 to 15% drop in your portfolio right when you start drawing income can force you to sell more shares just to cover bills, permanently damaging your nest egg. Inflation is the silent killer here too. Higher oil cost means higher cost for everything. Your grocery bill, your utility bill, your travel costs, they all go up. If your retirement income isn't rising with inflation, you lose purchasing power every single year. Even if you're already retired, this matters. Many retirees rely on dividends or interest from their accounts. When the market gets volatile, companies cut dividends or stock prices fall, and your income stream shrinks right when you need it the most. The global shift is accelerating too. Countries are rethinking their dependence on Middle Eastern oil. We're seeing faster moves towards alternative energy, but that transition is going to take years, possibly even decades. So in the meantime, nations like China, India, and Europe, huge importers, are feeling the pain, which slows down global growth and drags US markets down with it. This isn't temporary noise. Geopolitical risks in the Middle East has a habit of lasting longer than people expect. We've seen it before: 1970s oil crisis, the Gulf War, 2022 energy shocks. Each time the winners were the ones who had already built stability and reliable income, okay? The global shift that we're watching right now, I want you guys to zoom out for a second. This Iran crisis is not happening in isolation. We're in the middle of a broader global shift. Supply chains are being reshored. Countries are forming new alliances. Think BRICS nations pushing for alternatives to the US dollar in trade. Energy security is now a national priority everywhere. What does that mean for your retirement? More volatility, more inflation spikes, and less predictability in traditional stock and bond portfolios. The old 60-40 mix that worked for decades is getting tested like never before. When oil spikes and inflation sticks around, bonds don't always act as the safe cushion they used to. Stocks get hammered by higher interest rates and slower growth. This is why I keep coming back to the same two pillars: stability and income. Stability means protecting the money that you've saved, made, and invested so a market crash or inflation surge doesn't wipe out years of progress. Income means creating a cash flow that you can count on no matter what the stock market or oil prices are doing. These two things gives you the freedom to ignore the headlines and sleep at night. So I want to talk to you a bit more about stability. In times like these, the biggest mistake I see people trying to make is to time the market or chase hot sectors. That almost never works. Instead, focus on what you can control. Focus on diversification that actually matters, not just stocks and bonds, but assets that behave differently when the world gets chaotic. Principal protection. Oh my God. If I have to argue with another financial advisor about why protecting the principal is so important, they say, no. Make sure a big chunk of your savings can't get crushed by the next 20 to 30% market drops, okay? Inflation hedging. Some exposure to things that tend to hold value or rise when costs grow up. Liquidity, having cash or cash-like reserves so that you don't have to sell investments at the worst possible time. When markets are nervous, stability wins. It lets you stay the course instead of panic selling at the bottom. Now let's talk about the second key factor, which is income. This is where most retirees and most retirement plans fall apart in some uncertain times. You need money coming in every month that doesn't depend on the stock market going up. Social Security is one piece, but it's not enough for most people. Pensions are rare these days. The goal is to rebuild and to build a reliable income floor. Money you can count on for basics like housing, food, healthcare, utilities. Once that floor is solid, the rest of your portfolio can be invested for growth without the pressure of needing it to pay the bills. That's how you win retirement in a world that feels unpredictable. You separate your needs from your wants. Needs get covered by stable, predictable income. Wants and legacy come from the growth side. Okay, so what should you actually do? Well, here's the practical steps I give every client when the world feels shaky. Run the numbers, sit down and calculate exactly what your monthly expenses will be in retirement, and be honest. I talk to so many people who have no idea. You guys, be honest with yourself about what your expenses are going to be. How much are you spending monthly? Build your income floor. Look for ways to create guaranteed or highly predictable income streams that cover at least your essentials. Stress test your plan. Model what happens if oil stays high, inflation runs at 4 to 5%, and the market drops 20%. Does your plan still work? Rebalance with purpose. Reduce exposure to things that get hit the hardest in energy shocks. and add more stability. Review and adjust. Don't just set it and forget it. Check in every 6 to 12 months, especially when big events like this happen. Work with someone who's seen this before. A good retirement consultant can help you stress test and build the right mix of stability and income. These steps aren't complicated, but they work. They're the reason some people retire comfortably, no matter what headlines are saying. So, the Iran situation is just a reminder that the world is unpredictable, but your retirement doesn't have to be. Focus on stability and income. Protect what you've built and create cash flow that you can count on. That's how you retire without freaking out. If you want to get the full playbook, you can grab a copy of my book, How to Retire Without Freaking Out. It walks you through exactly how you do this step by step. If you'd like to talk about your specific situation, reach out to me directly. You can find my contact info below. Okay. Thanks for spending this time with me. Remember, guys, stay steady, stay focused, and I'll see you in the next episode. Till next time.